Assalamualaikum and hi everyone. My name is Mulfika Hydra binti Mama Hamdan. My metric number is E2483503. So now I'm going to talk about introduction petroleum extraction in Malaysia. Petroleum extraction remains an important sector in Malaysia as it contributes to national income, employment opportunities and energy supply. However, the industry is facing several challenges including declining oil reserve, fluctuating production level, rising extraction costs, and increasing pressure to shift towards more sustainable energy source. These issues show the difficulty of managing petroleum as a limited natural resource. This study is related to Sustainable Development Goal (SDG 12), which focus on responsible consumption and the sustainable use of natural resources. Due to limit access to detailed industry data, the analysis is based on available information with clearly state assumption.
Assalamualaikum and hi, my name is Nur Fazana binti Osman and my metric number is E2483463 and I'm going to explain about the current status and management of petroleum resources in Malaysia. Oil is non-renewable and depletable resources that is mainly used for transport, electricity generation and industrial activities. Since 1974, Malaysia has produced about 9 billion barrels of oil and 50 trillion cubic feet of natural gas. At present, daily production is around 660,000 barrels of liquid and 7.0 billion cubic feet of gas. The petroleum sector is mainly managed by Petronas through Malaysia Petroleum Management or MPM, which is responsible for overseeing exploration, production and long-term resources planning. This management is aligned with national energy policies to ensure energy security and economic sustainability. On to the next slide that highlight the key data and stakeholder involved in Malaysia's petroleum sector. In the first quarter of 2025, crude oil and condensate production reached 45.5 million barrels, which show a 4.2% decline compared to the previous year. Natural gas production also decreased slightly by 2.2% to 781.9 billion cubic feet. However, the week average lifting price increased to $76.4 per barrels, following the rise in global oil prices such as WTI. Several stakeholders are involved in this sector, including Petronas, government agencies, energy companies, government-linked corporation, industry association, universities, and international oil and gas partners. Cooperation among these stakeholders is important to ensure efficient resource management and long-term sustainability.
For this presentation, I analyzed petroleum extraction in Malaysia from 2010 to 2024. Petroleum is a non-renewable resource, which means once it is extracted, it cannot be replaced in a short period of the time. This analysis is based on Hotelling's rule. Hotelling rule explains how non-renewable resources should be used over the time. According to this rule, the net price of petroleum should increase gradually to reflect increasing scarcity. Net price is calculated as the oil price minus extraction cost. In this study, I assume a constant extraction cost of $30 per barrel. This assumption helps simplify the analysis and focus on the price and scarcity instead of cost changes. Overall, the goal of this analysis is to see whether Malaysia petroleum extraction follows the economic theory and whether it is sustainable in the long run. For this slide, I will explain the main economic result from the data. First, looking at the net price trend, we can see that the net price does not increase smoothly over time. Instead, it goes up and down. This happens because oil prices are very volatile and are affected by global demand, supply chain, and external shocks. Because of this volatility, the scarcity signal predicted by Hotelling rule is not very clear and in the real world. Next, looking at the production trend, petroleum production in Malaysia generally declined over time, especially in the later years. This suggests the oil reserves are being depleted and the remaining oil fields are more difficult to extract. Moving on to the user cost. User cost measures the change in the net price from 1 year to the next year. In many years, user cost is negative, which means that the net price actually falls compared to the previous years. This is show that scarcity signals are unstable and often reflect price shock rather than actual scarcity. And finally, the present value analysis show that when the discount rate increase, the value of future petroleum revenue become lower. This means that future benefits are valued less, which encourage earlier extraction instead of conserving the resource for the future. For this slide, I will discuss efficiency and sustainability. From an efficiency point of view, petroleum extraction in Malaysia is inefficient because producers only consider private extraction costs and ignore environmental and carbon damage. This leads to over-extraction compared to the socially optimal level. In other words, too much petroleum is extracted when social costs are not fully considered. In terms of sustainability, Malaysia's proven petroleum reserves have declined significantly over the years. Based on the current extraction rate, the remaining reserves last for only around 9 years. According to the Hardwick rule, sustainability can be achieved if all petroleum revenue are reinvested into productive areas such as education, infrastructure, and technology. This helps ensure that future generations are not worse off despite the deplete of petroleum resources.
Hi, my name is Nusaidah Nafisa binti Azmi. Today I will present policy recommendations for Malaysia petroleum extraction. Our study found that petroleum extraction in Malaysia faces serious efficiency and sustainability issues. The social marginal cost is $70 per barrel, which is much higher than the private extraction cost of $30 per barrel. Moreover, the remaining petroleum reserves are estimated at only 9 years. These findings indicate that current extraction practices may not be suitable for long-term sustainability. Based on this, we propose three main policy recommendations. The first recommendation is the implementation of a national depletion tax. This tax would apply to proven petroleum reserves and gradually increase as reserves fall below a safety threshold. Economically, this tax reflects the value of resources for the future, in line with Hotelling's rule, which says that non-renewable resources should be used considering future scarcity. By introducing this tax, companies are encouraged to conserve petroleum in the short term, preventing excessive extraction. This policy also supports SDG 12.2 on sustainable management and use of natural resources. The second recommendation is carbon pricing and environmental charges. We propose a carbon charge of $25 per barrel and an environmental damage charge of $15 per barrel. Currently, the environmental impacts of petroleum extraction, such as pollution and carbon emissions, are not fully reflected in production costs. These charges have internalized negative externalities, encouraging companies to consider environmental impacts in their production decisions. This policy also aligns with SDG 13 on climate action and can generate revenue for clean energy projects.
Hi, my name is Muhammad Abzal Khalif, Muhammad Khairil, and my card metric number is E248345. So I'm going to continue what my friends say about policy recommendation. We got reinvestment based on how it rule. Reinvest below 80% of petroleum resources rent and channel funds into National Trust Fund, renewable energy, infrastructure, and human capital development. And lastly, we got economic justification. Follow how it rules, maintain long-term economic welfare, and reduce dependence on non-renewable petroleum. That's all.
Although these policies have potential benefits, several critical considerations must be addressed to ensure successful implementation. The first consideration is the trade off between short term economic costs and long term sustainability. Taxes and environmental charges may increase production costs, which could lead to higher fuel prices. Low income households may be affected more, as fuel expenses represent a larger share of their income. Policymakers must balance resource conservation with social affordability. The second consideration is uncertainty and data limitations. This study assumed a constant extraction cost of $30 per barrel, but in reality, costs may rise as oil field mature or extraction becomes more complex. Additionally, the reserve life of 9 years could change if new discoveries are made, especially offshore in Sabah and Sarawak. These uncertainties can affect the urgency and political feasibility of depletion-related policies. The third consideration is stakeholder perspectives. Petroleum companies, including Petronas, may argue that higher taxes reduce competitiveness and discourage investment. On the other hand, local communities living near extraction areas may support environmental charges, as these policies can reduce pollution and protect their livelihoods. Understanding this perspective is crucial for effective policy implementation. The fourth consideration is the difference between weak and strong sustainability. The proposed policies mainly reflect weak sustainability, where financial investments are expected to replace depleted natural resources. However, strong sustainability advocates argue that environmental damage and carbon emissions can cause irreversible losses, which cannot be fully compensated by investments alone. This highlights the importance of balancing economic and environmental objectives carefully.
So for the conclusion, we know that petroleum extraction is vital to Malaysia economies. It is providing jobs and energy. But petroleum is not a non-renewable resources, and it contributes to environmental damage and climate change. To ensure the sustainability, Malaysia should reinvest petroleum revenue for the long-term development. And this is for the this is for the management responsible to reduce the environmental harm and prevent over exploitation. And for the policy, that we also know that we got SDG 7, SDG 8, SDG 12 and 13. And for the SDG 7, we know that promoting cleaner and renewable energy help reduce dependence on fossil fuel. And for the SDG 8, this is strategy balance for the economic growth. And for SDG 12, we got the responsible consumption. And for SDG 13 is carbon pricing policy encourage lower emission and support climate action. And this is all for the sustainable future. So that's all from our group.